All right, G, this one's just for you, and it helps me because I get to review stuff. But we're gonna be getting into it. Alrighty. So just a couple things to look at. That's in line with like what you already knew to be true, as order flow is like unfolding. Things to look at to help give you the confidence along the way of a price run. So you saw like the perfect tap of the CE of the RTH gap during the opening range. And then the balanced price range that we were talking about right here is overlapping an old NWOG as the price came back into it. It's also overlapping an upper quadrant of the RTH gap. This imbalance pretty much runs into it, so it's like a higher probability imbalance, and then we get tagged into that too. Also, what we have right here, which there's not, I guess you could say here's the imbalance that's overlapping. Funny enough, look how the logic works. Here's the imbalance. It's overlapping two daily wicks. I'm going to show you right now. Two daily quadrant wicks. So we have this one right here. It's this level right here of this wick right here. It's daily wick because you're supposed to use the wicks that go the farthest. So you don't need to bother with this one. Use this one because the wick is bigger. And it goes farther up. Once we get over this, now the only wick left is this one. This is the highest wick, reaching wick. So you have this one marked, you have this one marked. And look how I mean, I didn't draw it precisionally, but basically those wicks overlap, obviously, as you can see. The high to the low. You get the idea, something like that. It's hard to do it. So that right here is these two lines right here, these quadrant wick levels, and this imbalance overlaps it. So basically, I mean, you can get as nitty gritty as you want, but inside the BPR, which is the NWOG, we're tapping into the upper quadrant of RTH, and we're tapping into these two daily quadrant wick levels right here, and then we expand. Here's the upper quadrant. Here's That's another thing we can talk about in a little bit, but it's just the extension of that high of this daily wick right here. If you want to follow price up throughout the whole day, it's these blue lines. So here's like the lower, which we talked about. Then we get above it here. We get above the first presented of the AM. Look how we like we close above it right here, right at the beginning of the macro. Tag into it and expand. And this is CE of that wick right there. And now here is that first presented 7 a.m. gap we talked about. Suspension block, also first presented after the turtle soup. And what also is it like basically in line with? Oh, here's the upper quadrant of that daily wick level. This one again, it's this level right here. And then this is the high of this wick right here. The reason why it's purple is because I basically took a red. Yeah, I'll show you why. So it's a red line for the daily high, and then when you overlap a blue on top of it, it just becomes purple. But anyways, so we talked about this. So this is drawn at right around 7 a.m., and just like seeing how we get reactions. So as soon as we expand above the target, which was like the daily high or whatever that thing was that we were targeting this morning, basically where can you anticipate, where would it be nice to see price respect? This level comes to my mind. And look how we perfectly come into it, and this is also going to be like your 10 a.m. silver bullet type deal, This is like the low 10 o'clock power of 3. This is the low of the 10 o'clock candle. You also get like silver bullets in here. And then you can get a silver bullet also here as well using this. But this is that wick quadrant as well. So we tag into it, stay inside that imbalance, which we just talked about. And then here, and then the macro is still unfolding and we expand higher. So if you're trying to getting a, say you're expecting this to get targeted today, this thing to get hit today, like, we've had this thing marked out for a while now. And it's definitely, this thing is going to be a draw, or it is a draw, I mean. You know this level. So say you're looking for expansions, like, we're going to hit it today. So this is like a good area to like anticipate getting it into a continuation because after seeing the respection of here, the expansion, you can use the logic of like stop placement here low and get in on any like kind of imbalance you want, whether it's anything in here, whether it's this is a high probability inversion, in my opinion, because it's crossing over a wick quadrant right here. You see that? It's just very nice Judas. And like I had this one marked out, but when I was like looking back on it, and look how the one that I had marked out was used. I had this one marked out the whole day. So we kind of like roll under it. Did I have that one marked out? I don't know. Yes, I did have this one marked out. But anyways, furthermore, we look how we use like the upper wick, like the top of that wick anyway. So we like roll through it, okay, get above it, use it as expansion, coming back down, we stay inside of this like, this imbalance that I have. And now we come back down one more time to scoop this low right here. And look, we respect the upper wick perfectly. And in hindsight, if you had actually, and now you could say like, oh, this is kind of messy because we kind of close outside of it and then close above. But in hindsight, this is the higher probability imbalance because it overlaps a wick quadrant. And now if you want to look at that, look how it's respected. Like coming down here, CE is respected beautifully as this top of this quadrant wick is used, and then boom, then we have the whole like PM session thing going on, and that's another thing all within itself. But that is what I basically just wanted to talk about at all. That's at all. And so like you have like, say you see price expand. I think in this area I'm like, oh shoot, we got to go long. So go long. So am I gonna put my stops under here? No, I don't want to do 50 points. This should be respected. There's so much reason for it to get respected. So that's a much better stop place in my opinion. And so targeting here, and then ultimately targeting here. We didn't get up there today, but that would be like the kind of the idea. As it's gonna probably do during Asia or who knows. And then one other thing to not to make this too long, but yesterday we were saying before the daily candle really was created, we're like expecting an up close candle for that day, and that logic was just based on like market maker buy models, like kind of market maker buy model, kind of like the time frames things. So basically, why does it do that? Just hide drawings. All right. So we have the open of this weekly wick, the weekly candle. So it comes down, and yeah, we get so like purging out. Basically, let's go to the hourly. Sorry for all this. This is like market maker buy models. If you're think about how we can look at this thing as a market maker buy model on. All right, look at this. Where is it? Where was the perfect one? It's basically hourly, I believe. Anyways, you have like all these smooth highs up here that, I have all these smooth highs, smooth highs. There's a better one that we're looking at. It's basically the idea of this market maker buy model right here. And if you're and the way you can really get into it is like, okay, if this is going to be the low, this is the smart money reversal. You want to see the three stages unfold, and it has he talked about how they should be. So smart money reversal. Then it's the low risk buy. It's got to be fair value gap, low risk buy. Now you have all of this. Look at all this engineered sell side right here. So it's messing around. Then we open up this week like we talked about. Boom. It purges in. It purges into all of that into the imbalance and order block. That should be first. That should be first stage. First stage. So you got lowest buy then the first stage. And now so we have that, and then price comes up back above the NWAG, and then boom. Basically, when I said that is when this purge occurred, and we're like in this area. I was like, okay, ideally, look on a 15-minute. Ideally, this like low of the day should be in. It shouldn't go much. It shouldn't go lower than here. London clears out some Asia sell side, but it's basically like a microcosm of this thing. We're inside of this like first stage on like the hourly buy model as the week open, clearing out into the imbalance and order block, and we come above the NWAG. Now it's another clearing out of like sell side. So the daily candle, like what else does it have to do? We've cleared out higher time frame. We've cleared out like daily time frame, and now it should just expand, which it did beautifully. And to complete that like miniature market maker bottom model was like basically right here, like the original consolidation, which happened. That was like today we got that bump into it, which is what we targeted. So that was the only reason I'm talking about like how like why it should go up for that daily candle. And like you gotta like take things in the context of you kind of almost have to do work like from inside to outside in a way because it's like if you're just gonna look at like a higher time frame, say daily, like market structure shifts and all this stuff, it's like yes, it can be, but what is it gonna do before it does that? It's always gonna go from liquidity to liquidity, like liquidity to liquidity, and so when you can frame it in the sense of like when you can frame like market maker like the buy and sell models when you have like the exact PD rates that it should like be respecting for each stage of like accumulation, it's really helpful because it's like because it gives you like where we should be at within that instead of just like okay we should get some sort of retracement here to like create the second stage. Well, you got it when we know exactly what exactly it should be doing, and then when it and what PD rate basically should be hitting into, and what kind of like liquidity it should be purging. Then when you get that, you know within like this higher time frame where we are within that distribution of like the buy model. And then so once you get that, then you can like frame it down lower time frame into like the daily and be like basically the microcosm of this bigger one right here, which was this one right here, this one right here, this one right here, and then expecting that to happen. Once you feel like that should be the low right there, then you can wait around for like, the like, equities to open or wherever you like to take your like trades, and basically just like just try to find a way to get in line with it where like that lower time frame Judas should be, which I wasn't on the charts during like that time, but you get the point. Sorry if that was too long. We gotta do some calls and just talks. It'll be fun, man.